it's a absolute fantastic show for gold and silver both. More than 30-35% gains YTD. When you talk about Diwali and physical buying, this whole year people have been just waiting for a dip. I still feel gold price has a room on the higher side. So we were running a sawa lakh ki chandi, but I think chandi is not stopping at sawa lakh. It's a absolute fantastic show for gold and silver both. More than 30-35% gains YTD. And if I talk about 1 year gains, it's absolutely smashing more than 40-45% only for gold. So I think top three factors, if we just talk about gold, definitely one being the geopolitical risk, the risk premium that is we are seeing from 2022, may it be the Russia-Ukraine war or the Israel-Hamas war, or now the risk premium from the tariff uncertainty which President Trump has brought in since January 2025. So the more and tariff uncertainty will be there. Because if we see major countries have been under the list: European Union, India, Indonesia, Japan have been levied, have been slapped with a tariff. But with China, it is still pending. It is still, the 90-day breather has been extended twice. So till the time we don't get a clarity with China, I think this uncertainty will keep on going. Secondly, I think one factor which we were all waiting was the interest rate cut decision. That is one more factor. I think gold and interest rate have a direct correlation, so as to speak, because I'm sorry, an indirect correlation, because in 2018-19 also we saw that as soon as we turned from rate hike to rate cut, gold prices rallied. In 2020, we had emergency rate cuts, and once again now, till before Jackson Hole Symposium, Governor Powell were of the opinion that let's go data dependent. But after the Jackson Hole Symposium, may it be President Trump's pressure or may it be something else, the stance has changed and the probability for rate cut has increased. So I think that is one of the biggest factor, and definitely coupled with ETF buying, domestic demand, and central bank buying are, I think, the additional factors keeping the prices continuously on the higher side. Also, the last leg of the recent that we've seen above 1 lakh 2,000 3,000 mark on the domestic front has been entirely or partially, so as to speak, because of USDNR, because we've seen that massive jump from the recent close of 86 half to about 88, 88 and a half. So rupee depreciation has been one of the leading factors on the domestic prices. That is why we have this parity differences as well. I mean, on COMEX, we recently hit an all-time high, which is about $3,500 after a long time. But on domestic front, we were continuously inching higher because of USD. Average basis, definitely rupee depreciates by about 2 to 3% annually. Last year it was seen after Diwali, but I think in this year we are already starting to see it depreciating really fast. So I think more it depreciates, more domestic prices will get support from here. As far as when you talk about Diwali and physical buying, this whole year people have been just waiting for a dip, for a correction, but definitely the people have waited long, have missed also long. But I think gold as an asset class, definitely it's always one to invest in, because as India also we are a long only. Any at any given point of time we are always long. So we always buy the dip. So I still feel gold price has room on the higher side, yeah, even for this year. Historically, we had done an analysis where we found out that COMEX, since 2000, COMEX has never gone about 30-32% gains. But this year, I think the history can change, and we could see more than 30-32% gains on COMEX as well. And on the higher side, we feel 1 lakh 8,000, 1 lakh 10,000 is a range where you can see domestic prices on MCX could inch higher as a target level. Whereas on the downside, 1 lakh 3,000 to 1 lakh 1,000 is a good accumulation point. If we see a dip there, we definitely would recommend to once again enter if anyone wants to go long, or can average if one has a buying position. Below 99,000, 98,500 is our negation point. If we see a price go below 98,500, I think we'll once again reassess the fundamentals and look at how the things have changed. Definitely, I think silver has its own fundamentals now. It is catching up with gold. This whole year, gold has rallied first, and silver has then caught up with it. But along with that, industrial metals has also a big role to play with silver's rally. I think definitely the pace this time has been much faster, much higher. Industrial demand has been very aggressive. But with that, I think interestingly, the ETP inflows in US has been very strong. Same for ETFs in domestic front has been very strong. So the one which we were somewhere around 12,000, 13,000 crore AUM at 2025 start, we are currently at 21, 22,000 or more odd crores for silver ETF. So it is a very strong inflows. I think on the target level, we were continuously maintaining a 1,25,000 target for silver. I think today it got achieved. So we were running a Sawa Lakh ki Chandi, but I think Chandi is not stopping at Sawa Lakh. We feel on the higher side, 1 lakh 30 to 1 lakh 35,000 is where it can go next, which is close to 43 odd dollars on the COMEX. And if rupee depreciates more, definitely we will get that support as well. On the lower end, 1 lakh 15,000 to 1 lakh 18,000 is a good support zone. Below 1 lakh 15,000, I think we could see once again the lows hitting of 1 lakh 10,000 odd zones. But if we see 1 lakh 18,000 or 1 lakh 17,000, that could be a good accumulation zone for higher targets, because definitely prices have rallied so much, we could see some profit booking. Once the dips occur, we can buy once again. From my end as well, since 2022, we are holding this view that silver could outperform gold. Definitely, gold has also not disappointed, and it has matched, alongside with silver. But I think this year as well, silver could either outperform or match gold's rally, because gold is also, not backing down. So I think instead of diversifying against from gold, one, diversification is important. But I think gold and silver both should be in one's portfolio, because silver by nature is quite volatile, for a portfolio. And gold, definitely the volatility has increased, but it is still called as a safe haven asset. So I think there should be a mix of both. If you want volatility, the percentage of silver can be higher. If the portfolio should be a bit stable, definitely the percentage of gold should be higher. But then, just to give an example, if your 10% diversification is in precious metals, maybe 6% can be in gold and 4% can be in silver, based on your risk capacity, based on your tenure of investing. But both should be in the portfolio, because both are poised for a long run.